Every dollar Nvidia earns on GPU sales creates a derivative dollar for a company most investors have never heard of. Not a chip company, a cooling company. 9 companies are positioned to capture the trillion-dollar AI power buildout. But only 4 have multi-year contractual backlogs. The rest are riding momentum. Today, I put them all on the same table. I am Big Z. This is Big Z Research. No positions in any company discussed. This is industry analysis, not investment advice. Today I'm covering 3 things. First, layers 3 and 4 of the AI power value chain. The equipment inside data centers, and a wildcard that bypasses the grid entirely. This is where some of the most interesting economics live. Second, all 9 companies from this series, side by side, ranked by direct exposure to the build-out. In a previous episode, we covered generation and transmission, layers 1 and 2. Today, we complete the picture. Third, the risks that could break this thesis, and 3 specific signals you can track from public data to know whether it's accelerating or falling apart. For companies, 2 layers, 1 full comparison table. Let's go. Layer 3, inside the data center. If layer 1 is the toll road and layer 2 is the bridge, layer 3 is the plumbing inside the building. Every server needs clean power and active cooling. No exceptions. Vertiv is the closest thing to a pure-play bet on this layer. They make UPS systems, power distribution units, thermal management, and monitoring software. FY 2025 revenue, $10.2 billion, up 28% year over year. But here's the number that stopped me. Fourth quarter organic orders grew 252%. That's not a typo. Backlog, $15 billion at a book-to-bill ratio of 2.9. Here's why cooling is suddenly the highest value piece of a stack. That GB200 AI rack drawing 120 kilowatts, you physically cannot cool it with air. The laws of thermodynamics don't allow it. You need liquid cooling, water or dielectric fluid piped directly against the silicon. Vertiv co-developed a 7 megawatt reference architecture with Nvidia specifically for the GB200 platform, reducing deployment time by 50%. They're not just a supplier. They're embedded in Nvidia's ecosystem. Liquid cooling revenue more than doubled in early 2025, with a 40% compound annual growth rate projected through 2028. Think about what that means. Every dollar Nvidia earns on GPU sales creates a derivative dollar for Vertiv on cooling and power management. As long as AI scales, Vertiv's market scales with it. 2026 guidance, $13.5 billion in revenue. Still on layer 3, the physical construction side. Quanta Services is the largest specialty infrastructure contractor in the United States. They build transmission lines, substations, and the electrical systems inside data centers. FY 2025 revenue, $28.5 billion, up 20%. Total backlog, a record $44 billion, contractual, not pipeline. The electric power segment now accounts for over 80% of revenue. This is what I call the shovel seller position. Whether the winner is nuclear, solar, natural gas, or small modular reactors, someone has to build the wires. Someone has to trench the conduit, pull the cable, and connect the substation. Quanta does all of it, with 62,000 workers, the largest craft labor force in North America. And there's a structural moat that's easy to overlook. You cannot fast-track the training of certified high-voltage electricians and journeyman linemen. It takes 4 to 5 years to qualify. That labor constraint gives Quanta pricing power that isn't going away. 2026 guidance, $33 to $34 billion in revenue. Layer 4 is the most contrarian idea in this stack, and maybe the most interesting. Bloom Energy makes solid oxide fuel cells. Natural gas in electrochemical conversion, no combustion, direct DC electricity out at up to 65% efficiency. Compare that to 33 to 40% for a gas turbine connected through the grid. The key insight, Bloom bypasses the grid entirely. No interconnection queue, no 5-year wait. And in the last 12 months, the market has noticed. FY 2025 revenue, $2 billion, up 37%. Market cap has surged to $38 billion, a tenfold increase from early 2025. Here's what's driving it. Brookfield signed a $5 billion partnership to deploy Bloom's fuel cells at AI data centers globally. AEP signed a $2.65 billion deal for 1 gigawatt. Crusoe is building a 900-megawatt first phase for a 1.8 gigawatt AI data center in Wyoming, targeted for late 2026. The risk is real. Fuel cells cost roughly 9 to 15 cents per kilowatt hour, depending on gas prices and tax credits. In cheap grid regions, that's still a premium. But here's the bet. If the grid interconnection queue stays clogged for another 5 to 7 years, which it almost certainly will, then on-site generation isn't a luxury. It becomes a necessity. Bloom is the only company shipping a grid bypass product at scale today. They're doubling manufacturing capacity from 1 to 2 gigawatts per year by end of 2026. If the bottleneck thesis is right, Bloom's cost premium becomes irrelevant, because the alternative is no power at all. Pause here if you want to study the table. I've put all 9 companies from this two-part series side by side on screen. Revenue, market cap, backlog, and how directly each one is exposed to this build-out. Top tier for direct exposure: Vertiv, GE Vernova, Quanta, and Constellation. All have multi-year backlog visibility and contractual revenue stretching to 2030 and beyond. Second tier: Eaton, Vistra, and Bloom. Strong positioning, but either diversified or earlier stage. Equinix and WEC Energy are more indirect. They benefit from the trend, but they're not the picks and shovels. I wouldn't respect your time if I didn't give you the cold water. Risk one, and it's the big one, is an AI capex pullback. Microsoft and Amazon alone represent a massive share of the demand driving this thesis. If a recession hits, or LLM economics deteriorate, or a training efficiency breakthrough makes current GPU build-outs oversized, hyperscaler capex gets cut, and these stocks fall hard. This is not a low-probability risk. Risk 2 is regulatory. Nuclear permitting through the NRC is slow and politically contested. The Inflation Reduction Act's clean energy credits face headwinds every election cycle. Risk 3 is valuation. Vertiv trades at roughly 50 times forward earnings. GE Vernova at 40. Bloom went from a $3.8 billion company to $38 billion in 12 months. If growth disappoints by even one quarter, the multiples compress violently. Risk 4: if AI model efficiency improves dramatically, 10 times better performance per watt per generation, power demand grows slower than the market is currently pricing. None of these risks kill the thesis outright, but you should know exactly what you own. Here's how to monitor this thesis in real time. 3 signals, and you can track all of them for public data. Signal 1: hyperscaler capex guidance. Microsoft, Amazon, and Google all report quarterly. The single most important line item is data center capital expenditure. If any of them cuts capex by 10% or more in a single quarter, the entire complex reprices lower. If all 3 raise capex in the same quarter, which they did in Q1 2026, the trend is accelerating. Signal 2: GE Vernova's quarterly order intake. If their electrification segment is booking more than $5 billion per quarter, the bottleneck is real and deepening. Below $3 billion, demand is cooling. Signal 3: Vertiv's guidance. Vertiv is the fastest moving indicator in this complex because their order-to-revenue conversion is shorter than anyone else's. A guidance miss from Vertiv is the canary in the coal mine. Upstream: copper and uranium are structural winners. SiC Power Semiconductors, Wolfspeed on Semi, Infineon become critical for next-generation power conversion. Downstream, the AI operators who lock in cheaper, more reliable power gain a durable margin advantage. The direction is clear. The timeline is long. And the backlog visibility at these companies is the best I've seen in any industrial cycle in the last decade. For lines to take away: number 1, this is a 10-year structural shortage, not a hype trade. The grid cannot be built fast enough. The companies with contracted backlogs have 3 to 5 years of locked-in revenue. Number 2, the best risk-reward is the shovel sellers, Vertiv and Quanta. They win regardless of whether the electrons come from nuclear, gas, solar, or fuel cells. Number 3, Constellation and GE Vernova are the backbone bets. Slower to move, but their order books give you something rare in infrastructure investing: contractual certainty. Number 4, and write this one down: every quarter, Check the hyperscaler capex numbers. Microsoft, Amazon, Google. That is the single leading indicator for this entire complex. If they keep spending, everything works. If they stop, nothing does. Next episode, lithium, the most volatile commodity on Earth. From $5 a kilo to 80 and back down to 7. The supply-demand math, the geopolitics, and the 5 companies that control the cycle. I'm Big Z. Subscribe if you want industry depth, not surface-level takes. See you next week.